So, good day. So, our next lesson is income statement. So, what is an income statement? How does it related to the profit and loss, or how does it affect our businesses? So, let's say there is this young man named Lucky who wanted to do business but wanted to know first what is an income statement. So, he consulted Mr. Auditor. He said, "What is an income statement?" And then Mr. Auditor said, "It's a formal statement showing the performance of the enterprise at a given period." Huh? Lucky said, "How does it show the performance of the enterprise?" And then Mr. Accountant said, "It showed the result after all revenues and expenses has been accounted for, or it usually show the profit and loss of the entity." Lucky asked, "How do it look?" Then Mr. Accountant said, "It composed of revenue and expenses. Let me show you and explain it further." So, an income statement would usually include a company's name and then the financial statement, which is income statement, because there are three other financial statements, which is the balance sheet, the statement of cash flow, and the notes to financial statements. So, these are usually for the year ended because it showed the period for the year ended, because usually all the accounts are revert back to zero every accounting period, because these are nominal accounts, and the nominal accounts are usually go back to zero every accounting period to determine if the business is profiting for a certain period and to the next period. Because just imagine, if you wouldn't put this to zero, every now and then, you will never know which year the business is profiting and losing because you accumulated all the revenue and expenses. So that's not correct. Usually, you put that to zero every end of the period. So what is now revenue? So revenue are usually sales or the payment you receive for the services you rendered. And then what are now expenses? So expenses has different kind. You have the direct costs, which are normally the cost of goods sold, and then some other expenses that are further subdivided into certain part, which we will discuss later. And then we now determine the profit and loss. So take note, for this one, this is a positive, and usually you put the currency. It could be in Philippine peso or in other dollar or other foreign currency. So for profit and loss, it's normally positive, it's profit, but if it's negative, then it is a loss, meaning the entity is losing money and not earning. Okay? Huh. Are this the same in all business industry? Yes. However, each category have some distinctions. For example, for the service business such as accountant or lawyer who do service, it's usually involve service revenue and cost of services. So service revenue are usually the payment for the services rendered by the accountant, lawyer, or other professional body. And then, the cost is the salaries of the lawyer or the accountant who's doing the services. And then we also have merchandising, such as sale of merchandise such as fruits, vegetable. So this normally has sale and cost of goods sold. For manufacturing, such as manufacturing of television, it's also sales and cost of goods sold. However, the cost of goods sold of merchandising and manufacturing will differ. So we will discuss that later. Next, so we get our adjusted trial balance from our adjusted trial balance video. So for this one, we said that income statement only include revenue and expenses. So all the assets account will go to the balance sheet, and all the income and expenses account will go to our income statement account. So here we also have again the company name, income statement for the year ended 12/31/2019. So we have the service revenue 175,000 from our trial balance, then less cost of services, which are normally salaries, 50,000, and then gross profit 125,000, less expenses. So what are our expenses? We have supplies expense 3,000, utilities expense 34,000, rent expense 30,000, and then depreciation expense 6,416.67. So total of 73,416.67. So meaning the company is profiting 51,583.33. But this one is not yet the profit because this is before tax. So we wouldn't put any computation for tax in here because we would have a different slide for that one. Okay? Or a different video presentation. So what are the statement of cost of goods sold? You said that each account or each entity has a different cost of goods sold. So it's different for each business activity. So for service, it's normally the statement of cost of goods sold involve only one, which is the cost of services. But for merchandising, we usually have the beginning inventory, those that are not sold before the end of the year or at the end of the year. Then we add all the additional purchases. Then we have now the total goods available for sales. List, ending inventory, those that we can count at the end of the year that has been not sold. So normally there are two methods to do this, which is your perpetual and periodic, but we would have a different slide for that one. Normally periodic was the one being used because under periodic you only count what is been left in the warehouse. Next, you have now the total cost of goods sold. But for manufacturing, it's quite lengthy. So we have the beginning inventory, we add purchases, then we have now the total raw materials. Next, less ending inventory, then we have now the raw materials, direct raw materials being used. So these are, example, if you are into woodcraft, so these are the woods, the paints that you have used to paint and to do the woodcraft. Next, we have the direct labor. So the direct labor are those people who are directly touching the woodcraft. Then we have the factory overhead. So factory overhead, these are the minimal materials. And normally, these are also the light that are directly used for the woodcraft. And anything that are not usually unseen, but because it's a small amount. Then you have now the total manufacturing cost. Next, we have now beginning work in process, those that are unfinished. But for example, for woodcraft, when you already build the wood but no paint yet, so these are work in process. Then we have now total goods placed in process less the ending work inventory. And then we have now total goods manufactured. We add the beginning finished goods inventory. Then we have now the total goods available for sale less ending finished goods inventory. Then we have now the total cost of goods sold. So normally, all the others are just the same except for the cost of goods sold. So that's it. Yes, so that's our income statement. Okay, if you like this video, please help me reach out for more by hitting the subscribe button below. God bless you.